Most UAE investors don't have a portfolio, they have a collection. Stocks here, property there, gold somewhere. It looks diversified, but it isn't. And if real estate is your retirement plan, this video is for you. In the UAE, property often becomes the entire plan, not one part of it. That feels logical until you understand concentration risk, liquidity risk, and life stage risk. So, today I'm not going to talk about products, I'm going to talk about asset allocation and why it matters more than anything you own, especially if you are investing from the UAE. Let me explain why this conversation matter even more here. The UAE gives investors something rare: choice. Choice across global markets, across currencies, and across asset classes. Decades of global research show that investors with more choice only benefit if the choice is structured. And yet, despite this flexibility, most portfolios here are still concentrated. For example, I often see portfolios where most of net worth is locked in one property. Equities are added later, often in one geography. That's not asset allocation, that's exposure without design. So let's reset the definition. Asset allocation is not about forecasts, it's not about returns, and it's not about picking better products. Asset allocation is about how your portfolio behaves under stress. Long-term investing research consistently show that investor behavior matters more than individual investment selection. It answers three questions. What is this money for? When will I need it? And how much volatility can I live through without changing decision? Let's say if market fell sharply tomorrow, which part of your portfolio would force you to act? Once you understand that roles, portfolio becomes simpler. Equity is the growth engine. It builds wealth over long periods, but engines vibrate. They are powerful and yet uncomfortable. Fixed income is shock absorber. Global portfolio frameworks consistently show that fixed income exists not to outperform equity, but to prevent damaging decisions during market stress. It reduces volatility, and more importantly, it stabilizes behavior. Real estate is an income and diversification sleeve, valuable but illiquid. Gold and silver and alternatives are insurance, not performance engines. If every asset is trying to outperform, no asset is doing its job. And now let's bring time into the picture. Asset allocation must change as life changes. In early stages, time is your biggest asset. In midlife, responsibilities rise. Risk capacity starts falling. In later stages, predictability matters more than growth. Planning wisely is not about being aggressive or conservative, it's about alignment with the life stages. Risk tolerance is emotional, risk capacity is mathematical. Let me show you how good intentions quietly create fragile portfolios. A typical scenario: one property dominates the balance sheet. Real estate concentrates three risks in one asset: market risk, liquidity risk, regulatory risk. It feels stable until flexibility is required. Another scenario: strong belief in equity, no stabilizing assets. Most long term underperformance does not come from bad assets, it comes from bad exits. When volatility arrives, behavior becomes the risk. One final pattern: a portfolio that performs well, no rebalancing. Risk increases quietly. Without rebalancing, portfolios drift away from their original risk design. So, what do disciplined long investors do differently? They write down their asset allocation. Long term investors rely on return allocation policy, not memory, not emotion, not market commentary. They define roles, they manage concentration, and they rebalance deliberately. If market tests your patience, does your portfolio have a plan or just hope? Market corrections are not accidents, they are part of the journey. Asset allocation doesn't remove discomfort, it removes forced decision. And asset allocation is not about maximizing return, it's about minimizing regret. Long term investors don't ask, what should I buy next? They ask, is my structure still aligned with the life? If you are investing from the UAE, asset allocation is not optional, it is the foundation. Thank you. Happy investing.